So Alok, welcome to the Investor Hour.
Thank you, Rahul. Thank you so much. It's wonderful to be, on your show once again.
Once again, yes.
Once again, and given the marquee names that you've had on your show so far, I'm feeling a bit humbled and surprised that you've invited me. But nevertheless, thank you very much.
As always, very understated. No, it's a privilege and honor to have you, and you add a lot of value and the aura to the show, if you will. I think the world has changed in a way where people have very strong followings, which can now be measured. So the perception is now reality in many senses. And when I look at what you've done over the last many years, actually, I think we first met 5 years ago, 6 years ago.
Possibly. I mean, my journey in the current avatar started in 2016. So maybe a couple of years after that. So 2018 maybe.
Yeah, and it's been stupendous. And I've seen you on Twitter for sure. We met a couple of times, but on Twitter, I've seen you more regularly.
Yes.
And you got a band of followers, right? And they're just growing and growing and growing. And, I wish you all the success for that.
Thank you.
And you've always been telling me that Equitymaster needs to get their Twitter right.
Or Twitter or some social media, where you can have a strong hold over things. And I think this is just purely content-driven sort of following. I never intended or planned, to have this. In fact, I think when I started Twitter, that was around 2016. Although I had an account since 2010, but I never could use it because Twitter somehow, when you first go to that platform, it is intimidating. You are unable to figure out what is retweeting, how do you, do things, how do you reply, so on and so forth. At least it was to me in 2010. And so I made an account and I never used it. And then sometime in 2016, I started to use it. And, it seemed getting 200 followers would be a great thing, to have. And then 2000 and then 20,000, and it just kept rolling on and on and on. Yeah. And the interaction with a lot of people there, a lot of youngsters, in fact, especially, that gives you a lot of, sort of a feedback loop as to what people are thinking, how they're approaching the markets, what is that gap in the market that needs to be addressed. Yeah. So it's almost like one-on-one interaction happening at all times.
So that's the beauty of social. So I'm not much of a social media guy. I don't do much. In fact, the other day I was trying to post on Twitter that we just recorded an investor hour with Saurabh Mukherjee. It took me like few minutes to type it out because I'm wondering what should I say, how should I say it, and the pressure of the limit of characters or whatever.
Correct.
I don't know, but the power of social media is that it's taken away the middlemen who are going to interpret what people think.
Yes.
Now you are in full command. You know what people are thinking, doing, saying, and then now the decision, the value add is shifted to the decision making as against interpreting what people think.
That's right.
And
so
get that right.
Yeah. So again, I would say while we can look at it analytically from that perspective, it's more of, at least in my case, it is more of, going with the flow kind of a thing where the business dynamics is not really driving me or how I do it on Twitter, but I just enjoy being there. It's just like penning down my thoughts without really bothering, who will get offended or who may, not like it.
You have a thick skin.
You have to have thick skin. And of course, prior to this, I had never sort of, done much of writing. So this is in fact a very good sort of format of writing things down, what you're thinking. And that of course also helps you in clarifying or, deepening the thoughts that you have. And of course, it's also a confirmation loop. So that can also take you in a wrong direction, of course, but it's great to read a lot about, what other thoughts are there and then, write about that. So I think it's a good exercise.
Yeah. And I do find myself reading stuff on Twitter. Usually I prefer long form. So I'm usually trying to read that, but often I go to Twitter, and you're right. And you've nudged me so many times on Twitter, right? That you can get a lot of good news over there, good information, good thoughts.
In terms of news, Twitter is the fastest media where you get the news. So any breaking news, anything flashing coming out, Twitter will be the first place.
Yeah. And that would matter a lot to people who want to be aware, etc., and also who are tracking movements which can have near-term impact. Let's say in your case, you built a fantastic franchise called Weekend Investing, and what amazes me is that when I first read about it, I think it was a piece written on maybe money control.
Money Control came out with an article in January 2018.
I think that was the piece I read, and the way you did it was so amazing. You are still trading, right? But you're doing it in a way which is so calm,
So I would think that all that has come out of just experiencing the pain of investing / trading over the years, in the sense that I started in 95, so long journey since then. So seen the bull market of 2000, then 2008. Before that, crashes in 2004, 2001, 2008. I was like, I make a lot of money each time and I lose it all, or at least most of it. So what am I doing wrong here? It's not compounding well for me. So that brought me to the level of thinking as to, you need to make money, but then you need to also, not lose it all. And you need to have exits. And, given that, and more so now in the last 5-7 years, I mean, the world is becoming a very destructive, or I may say a place where, things are moving very fast. Trends are changing very fast. The longevity of companies would have dramatically reduced over the decades. And there are studies in the US have come down from 4 decades to 1.5 decades or something like that, the average age. So if that's the kind of disruption that can happen, then how can I, sort of buy and hold for a decade or 2 decades and work with that? And I've tried that, but it was just not my sort of, type of thing to, because maybe I was so close to the market at all times. I was in the broking business. I could not really, hold on for 5 years, 10 years on a stock, which is, dipping 80% in front of me. So I sort of went back and said, then, can I devise a mechanism where at least I reduce my pain, even if it is at the cost of reducing some returns?
Interesting.
So
okay. So we're going to talk a lot about that today, of course.
Okay.
But let's start from pre-95. So let's start with the most fundamental thing. Where did Alok grow up? Where were his formative years spent?
So formative years spent in Delhi, born and brought up in Delhi. My father was a central government employee.
Okay.
Transferable position. So moved to Kanpur for some time, then later to Bhilai. So that moved to Bhilai actually in I think in my 11th grade. And I just went there for the summer because I didn't want to change schools while I was in the 10th grade. So I just went there and I found a fantastic ecosystem where, kids were, and Bhilai is a steel city, as you know. So, very small.
The SAIL plant is there.
SAIL plant is there, yes.
Among other things,
And I found kids there, so sort of focused on, let's say, preparing for the IITs and, focused groups and, very great results from even the public schools there, the government schools. So over the summer, I had a fantastic experience interacting with those guys. And I said, in my Delhi school, in the last 5 years, nobody's got into IIT. I was at Air Force Bal Bharti and there was hardly any score there. And here, in the government schools, it seemed like that, all the kids are going through, whoever is really working hard. So I said, why not, use this opportunity? My father is already here. So I moved from Delhi to Bhilai for 2 years and joined a government school there. And believe me not, we were, I think, 25 kids in that class. and 10 of us came to IIT. So the kind of people that I was interacting with was amazing. I mean, there was a core group of 10 kids. We used to go to a maths class together. And two guys in this group of 10 used to say that we'll top the IIT. That the kind of confidence. Before the exam.
And this is Bhilai. This is in a government school.
Yes,
this is not like a hi-fi private
nothing. Private coaching, yes, from local teachers, but fantastic teachers, and charging nothing basically for imparting that education. So one guy used to say, I'll come first. The other guy said, "Ana to mujhe bhi first hai, but since you'll come first, I'll come second." And believe me not, those guys actually came second and fifth.
Oh my God! Wow.
I mean, it's a crazy stat actually. 200,000 people sitting for that exam, and to have that confidence that I'll be coming first in this exam. So those were the kind of brains that were brushing off.
Which year was this?
This was 1986.
1986. Wow.
So I guess something brushed off on me as well, and I was also pushed into IIT along with them. And
the famous story of diffusion, right?
Yeah, because when you are sitting and discussing and problem solving with these kind of brains, something will come out and benefit you.
Yeah. So, and what did you do at IIT? What were you?
So I wanted to do mechanical engineering, but I couldn't get it through at IIT Delhi. So I chose chemical engineering post that. And
not a big jump between chemical engineering and investing. That's very close actually.
We'll talk. So at that point, I think I had no clue about the stock markets or investing, even much after that, in fact. And just like a flow was there, everybody's going to the US for further studies. I also went without really thinking that what I will eventually do. So I went for a master's in biotechnology. I was doing that. My research advisor was very happy with my research. He said, "Alok, why don't you do a PhD now after 2 years in the US?" And at that moment, it was sort of my turning point where I said, where am I headed? I mean, this is not what I really wanted to do in life. And if I do a PhD here, I'll probably get stuck in the US, teaching some academic somewhere or some research. And this is not really my calling. So my intent is to go back home and maybe look for a decent position or decent job there. So I just walked to the MBA school in the same campus. I was at University of Maryland, and I went to the dean's office and I said that I want to do an MBA. And he said, "But you don't have a GMAT score and this and that." And I said, "I don't even have money to pay for the MBA." So he said, "Okay, Alok, if you get a GMAT score of 750, I'll give you a tuition waiver." So I just studied for a month and a half, and I was able to get that score. Got into the MBA program. There was a dual degree program in Masters of Science in Finance. So did that, came back to India in 95. At that point of time, NSE was getting formed. They had come
94,
out. 94 was when they actually came out with the ad in the papers. And my father, just like most other government employees, was also interested in stocks, etc. So he used to invest a little bit. So he suggested, why don't you are anyways coming back home, and I was also interviewing with McKinsey to have a position here in Delhi, but somehow it was just like a startup at that time. So we got together 2 or 3 investors and put in 20%, 30% of our own money, and started off a stock brokerage house. So that was the start of that journey.
Which year was this brokerage house again? 95.
This was formed in 95, started in 96, I think. Yes, 96 March.
So here's So here's a question I want to ask. Now, you studied in various schools, including a government school, right? And did you at any point in time feel disadvantaged when you, let's say, when you go to the US, the communication, etc., that, because I think a lot of people have a perception that government schools don't usually impart full education for the full, like, growing up of the child, the person, the understanding, the language, the communication and everything. How was that experience for you, and how did it help or not help you as you went along in your career?
I would say my experience with the government school was better than the private school that I was at in Delhi. in terms of, I mean, it's all about the network around you, the kind of students you are interacting with, the kind of atmosphere the teachers are sort of enabling you to get into. So maybe Belai was an exception where those teachers were, tuned to the idea that if we allow these kids to, sort of do their own thing at home, study hard for their IITs, they will go through, and we don't have to do much at school here. But I think it's all about the network or the camaraderie that you have. And yes, I think the fact about the point that our schools are not so focused on communication skills or personal skills, I think that really makes a difference when you are sort of in a culturally different environment. And I think that matters the most, even in not just in school but in IITs also. I mean, from what I've seen, scores don't matter after a while. After your first sort of job or first, scores don't matter. I mean, if I got a GPA of 7.5 and somebody else got a 9.5, I mean, 10 years later, that doesn't matter. I mean, it was how you navigated your journey in your job or your business or whatever that matters. So from my experience, all the backbenchers of my classes in school, all the backbenchers of my graduation in IIT, they're doing really well. Yeah. I mean, that's the stark, reality of life. And those who are mugging the books at all times, they're doing all right, but not so well. So, that's
amazing how it turns out, right?
I think and we keep pushing our kids for better scores and so on and so forth. I think that's kind of misaligned.
Yeah, I completely buy that view. And talking about backbenchers, I have similar view. It's a pattern which plays out everywhere. I guess there's a thirst and hunger for success, which is stronger than a feeling of an entitlement that I'm smarter, so I'll do better.
Yes.
So I guess that hunger and the thirst drives.
Definitely.
Okay, so back to 1996, and you set up a broking outfit.
So we set up a broking outfit. Originally, it was set up as an institutional broking outfit. So we had a Delhi office where the operations were there, and we have a very small shared office in Mumbai for dealing with the institutions. So we empaneled
with 96. Public sector mutual funds were big time into stocks.
Yes.
Private sector mutual funds had come.
And there were FIIs
had
come back, and they were like, Hong Kong based FIIs and US based, several of them. So empaneled with a lot of institutions, empaneled with a lot of banking arms, investment bank arms, so on and so forth. But within 2-3 years, I realized, and I had a VP of institutional business who should handle things there on the front. And I was managing the sort of, the operations background here at Delhi. And I realized that this is really a murky business. I mean, no deal can go through, without favors and those kind of things. And when I had to sort of go deal with a couple of people, I said, I can't do this. I mean, this is not my way of doing it. So gradually moved to corporate business. So we had several.
Do you recollect what was the brokerage commission rate those days you were charging?
Yes. So institutional business still was around 50 basis points.
0.5%.
0.25 to 0.5%. Retail broking before NSE used to be 2% at least for Bombay and more for regional. Once NSE came in, it came down to about 1% for NSE and maybe 1.5% for BSE. Because from Delhi, you needed to have a counterpart in Mumbai to do BSE trades. And then, of course, it kept dropping, and
way to zero. Thank you, Mr. Kamath. Bring it down to zero.
So we started with institutional, then we moved into corporate broking. So we had several corporates who we were dealing with. Again, the same story, a lot of defaults, payments not coming through, because at that point of time, the regulatory and compliance structure was very informal. It was a very relationship-shaped based business. I mean, you would buy stocks and, the payment would not come through, or you would sell stocks and the deliveries would not come through. And very interesting here is that deliveries used to be in physical at that point. So my Delhi office used to get a suitcase full of deliveries collected at my Delhi office. Then my guy used to go to Mumbai in a Rajdhani carrying that entire suitcase. go to the NSE clearinghouse, submit those, get another bag full of deliveries which we bought, come back to Delhi, stamp, and distribute to all the clients over Delhi. It was a huge process. I mean, this.
So no wonder the Rajdhanis were always full. Delhi brokers, all the brokers are sending in people.
Yeah, I mean, if you think about it, I mean, it's the demat system has revolutionized the way we are trading, and turnover used to be like 200 crores a day, and we are now hundreds of lakhs of crores of day in turnover. So exchanges used to open 11 to 1, brokers used to go play golf after that. I mean, it was a different life. And so things changed a lot after demat, and after margining systems came into place. There were lesser defaults, lesser bad deliveries, so a lot of things changed after
and
that.
At some stage, what was the stage that pushed you from, so you already told us that it was a murky business, right?
Yes.
So I guess you were always facing headwinds because it's a clash with your morals that you don't want to do.
Correct. So then I moved into retail business. I said retail is still clean. You're dealing with an individual, and you can always choose to say no to things. So 2000 to 2008, we were doing retail business. Again, same center, Delhi, very small outfit. Did not go into a networking sort of a thing like many others did. 2008 was, I think, the turning point for the retail business, where after the crash, the business really went very slow, and the online brokers had started to sort of come in.
That's right.
I think 2010 onwards, Zerodhas and the India Bulls of the world had taken over. So by 2011-12, I knew the writing is on the wall, and unless you really go high technology and high investing into this business, this won't last.
So between 95, when you came back from the US, and 2010-12, when you went back to your college reunion meets and all, how did that feel? Because you were still struggling to make a mark, I would assume, and trying to get it right, and dealing with this big dilemma: do I compromise my morals to hit a higher number so that when I bump into people, I'm driving in well and dressed up well and all that other stuff? How did that feel?
Those things,
a very long phase.
I would say, those things never mattered to me, even till today. What others are thinking about me as in terms of success or failure, I don't think really I mind that as much. But of course, yes, there was a sort of a feeling in the back of the head that did I do a right decision by getting into business? Because a lot of my counterparts were CXOs at various places, in MNCs, in consulting companies, so on and so forth. So there was always a sort of a thought that did I do it right or not? But over time, I realized that, I had my own comfort zone as well. And, I've actually lived in this house for 50 years now. I mean, minus the couple of years outside. So, living with your parents and with your roots there, that has its own advantages. And there were ups and downs in the business, but it was reasonably all right. I would say, I mean, it was not really, you didn't hit a 6, but it was doing all right. So 2008 onwards, I started to feel that, the business has really slowed down. I also started a BPO on the side. I was doing financial transcription for US companies. So, they would do a earnings call, and overnight you would, sort of deliver it for them. So that was also a good learning phase that came around. Then I was hit with some personal tragedy. My father was very fit at the age of 67. He got cancer, and I was involved with his procedures for 4 or 5 years in the hospital. So 2009 till 2013, I was practically off from business. I was just overseeing it from remotely. And obviously, when you are sort of not hands off from the business, it will take a toll on the business itself. So after that, I was kind of, sort of rebooted my life after that, in the sense that the business went downhill. I shut down the brokerage house. My father was, he went away in 2013. And I was also involved in a very peculiar legal case. So one company which had demerged in 2007. So there were 2 parts into that from the telecom company that became one operating part and one hardware part. And the operating company got a telecom license. And so I invested a lot of money in that, playing the demerger.
Mm-hmm.
The sum of parts is going to be huge. And what happened was that the part that was going to be listed as a telecom company never got listed. So imagine buying a listed company and that company getting demerged into two parts and one part never listing back, and which was the most valuable part of that company. So I went to court against the company. There were 18,000 shareholders who were stuck like this. I went to court. I fought a very hard, long battle for 7 years there. And it was a Jaipur registered company. So the High Court of Jaipur was handling the case. So for 7 years, toiled there. We were about to win the case, it seemed. And a huge penalty was about to be put to the company. But they fielded the former finance minister of the country, and we lost the case on the last day. So this, along with the hospital visits, it kind of these are very negative places. So police, law enforcement, courts, hospitals, these are all very negative energy places where if you go, all your positivity will get sapped. So that 4 or 5 year period kind of realigned my thinking as to what am I doing. And I saw so much misery in the hospital. Obviously, I was in the cancer wards. I saw kids, women, old people, young people. I was like, what is this life? What are we doing? And, if we somehow end up here, and that can happen anytime, then, what's the whole point of it all? So I kind of went into a shell and I said, I have some limited capital with me and I can invest and trade and, make my living. Don't need a business around me to do that. So I kind of gave it all up. In 2013, I was like, everything clean, gradually just wind up everything. And, just work from home. So work from home came for me very, very early. I was always working from home from that perspective. And then I got really bored in a couple of years because earlier there were 20 employees around me and so on and so forth, and thousands of clients. And here I was, sitting and doing my thing on my own. So then I started tweeting. 2015, 16, I started tweeting about, whatever I was doing. And these strategies that I had kind of developed for myself to run my own small capital on. So one of those strategies, I said, okay, I'll disclose it on a blog and I'll put weekly updates on it. And if anybody wants to follow this, more than welcome. So I started doing that. And that year turned out to be really good. 16, 17 for mid and small caps. That strategy made something like 52% gains on that. So suddenly there was a lot of interest. What kind of strategy is this? What is momentum investing? And funnily, when I designed all these strategies, I never knew that there was something called momentum investing. It was just my thought as to how one should be going around picking a portfolio, how one should be exiting, how one should be entering. And to be honest, I thought I had struck gold and I had hit something which nobody else had ever thought of.
You had created the wheel. You thought.
And later on I found there are 200 years of history and of studies around this, and it's a very established form of investing. But nevertheless, every person does it in their own ways and the nuances are different. Yeah. But
I've had a similar experience when we were doing something in the business, and I thought I'd cracked something until I realized it's most people are already doing it. But it's a nice feeling, right?
It's a nice feeling. It's a fantastic feeling.
Yeah,
it's a fantastic feeling.
It's a fantastic feeling. But tell me something. All along, you got a background. You got academics in a different field. You were doing broking. I guess that gave you exposure to people's psychology, etc., etc. But when you were going about building this strategy, I don't think most people understand that they have to build a strategy to invest money. How was that process like, and what did you have to go through in those couple of years?
So I think the experience that I had of seeing how these thousands of clients that I had in the broking company, how they fared. So I would think, most people made money by luck and not by design. A lot of people made money because they were, they got stocks from, their earlier generation maybe, and they were just holding on. That was one. Second was of ESOPs. A lot of We had, clients from Levers, Colgate, senior management people as clients. So they were getting ESOPs every year, so on and so forth. So that was another way. So I found very few clients who could actually maneuver the markets and, strategically sort of have that compounding effect going, and, also exiting the lemons once they could identify them. Very few people had any strategy around it. I mean, it was more of, luck by chance. And maybe sometimes even just sticking to it. Somebody told me to buy these 10 stocks, and I'm not going to now never going to get rid of them. And, two of them really did well. So studying that behavior over, 1.5 decades, I found that, and my own investing or trading, whatever I was doing also was instrumental in this, that position sizing was one major part, where like this demerger case, I'm telling you, I kind of went all in, 50, 60, 70% of all my exposure into that, because it was a gold mine. I mean, it was a sitting duck, but who could have thought that the stock will not list back? So, that kind of a black swan happening, you can never even dream about that. I mean, today, if we buy a demerger story, we assume that both the stocks will come back and list.
Yeah.
Right. So that de-risking of investing, saying that whatever may happen, that stock may not list, that stock may go to zero tomorrow. That one story should not destabilize your portfolio.
Yeah.
Or whatever may happen to equity markets, your overall portfolio should not get destabilized to the extent that you can't survive. So asset allocation became a huge part in my thinking, at least.
Yeah. So I know we've spoken about asset allocation a couple of times in the past few years.
Right.
About other assets. I know you have views on gold, you
Yes.
have views on property, and we'll talk about that. On position sizing, I think, and I completely agree with you. When I talk to people, I think more people don't realize their goals because of poor position sizing than by actually picking the right stock or not. So they may end up with the right stock, but they may allocate nothing to it. And sometimes they have conviction in a stock, which is difficult to justify, and they may just go, all in.
Usually what happens is, in conventional investing, is that you research a stock, you ask 5 people about that stock, you study the history of the stock, you look at the balance sheet. By the time you come to the decision that you're going to buy it, you're already married to it, and you can't back off now. Yeah. So essentially, once you are sort of totally in, and you've researched it, you've done all kinds of scuttlebutt, and everything is done, and you're married, and you're in, and now you have a bad quarter, and now the stock is down 30%, and of course everything is still all right, management is fine, everything is fine. Now is the decision point that whether the next quarter is going to be another -20, or is it going to recover, or whether the next year is going, and maybe the next 2 years are going to be bad. So at what point do you take a call, if at all? I mean, it cannot be, in my view, at least in today's day and age, that I don't mind the stock going 80-90% down, it'll come back in 3 years, because the business may get disrupted. I mean, the kind of disruption that is out there, who knows what can happen in 2 years. Yeah. So from that perspective, this endless wait became very painful for me when I was doing this in early years. And I kind of thought, I must reduce this pain somehow. And that pain can only be reduced if you have a strategy, and if you have diversification, across stocks, and of course asset allocation on top of that. So you have several layers of protection, if I may.
Got it.
With your core being, maybe your real estate, gold, cash, that is your core, and then you're building layers on top of that, and you're saying that even if these layers get peeled off, my core should remain strong.
Yeah. So I think what you're saying is that typically people approach investing as one stock opportunity, as one individual opportunity.
Yes.
But what you're saying is that at every point in time, you need to look at it in totality. And how you control for risk is not just at the stock level. You control it at the stock level, at the basket of stock level, your allocation to stocks, and the
Yes.
overall allocation
Yes.
to wealth.
Yes.
Yeah.
So there are several layers
Yeah.
from which risk has to be perceived.
Yeah.
So
yeah.
my sense about anything in life is that whatever I'm doing, let's say tomorrow you take that out of my life, how do I survive?
Mhm.
So, if my equity portfolio is gone for some reason,
Yeah. Yeah.
do I survive? Do I,
Yeah.
do I exist?
Yeah. So I don't know whether you have a view on this or not, but these days I see discussions, and I think even you were covered in that newspaper, where people are discussing how much wealth, how much do they invest in stocks, right? And a lot of people, and good for them, they're rightly so, they say 100% in stocks, 90% in stocks, zero in real estate, zero in gold, because India's future is great. And I think, I think if the readers of that paper actually buy into that, I think that they're doing a great disservice to their futures, because that the guy who's reached that 90-100% probably hit a jackpot 20 years ago, because of which all his wealth is in stocks.
So
And
I would think every person is built differently. So there are people who are happy to have 100% equity exposure and who are happy to have their net worth swing, plus 100 or minus 50. I'm not that guy. So, it all depends upon your,
demeanor, your approach,
your demeanor, your approach, your risk-taking ability, how much swings you want to see in life, what is the cost of that volatility that you put to it.
But if you go by the most fundamental thing, people don't like losing money. I think 95% of the people who will be watching this, they're okay with the 10-20%, but if they get nervous, if things, if the loss appears permanent, forget it being permanent or not, right? If it just appears to be permanent, they're going to shake. They're going to have a problem. And I think we saw it in the pandemic times, right?
We are seeing it all the time. I mean,
people's instinct is to sell, get rid fast before it falls more, as against anything else.
So I think the key is to understand who and what you are, what kind of a stress test can you bear. I think it is best to sort of imagine that what if I go there at that point? What happens to me? Can I survive?
If the markets fall 20%, would I panic or would I not panic?
See, banks do the stress test all the time, right? If the NPAs go to this level, how will you come back? So my approach is always like this. You put me at the bottom of the well, and can I climb back up? So that is the sort of approach that I would think, because even in practical analogy, let's say a drawdown of 20% versus a drawdown of 40%. If you fall into a ditch which is 1 feet deep on the road, you will get out of it and walk again. But if you're falling 5 feet deep, you may have difficulty coming back up. So the deeper you fall, the more difficult it is to come back. And the kind of scars that it'll put on your psychology, you may not be able to invest post that.
Like one of my colleagues told me many years ago, he says, remember, to make up for a 50% loss, you need 100% return.
Yeah, absolutely. That's the math. And also we can't think, in a compounded fashion. I mean, we think very linearly. And hence, what we can't see is that even a 12% return compounded on your portfolio, where it takes you in 10-20 years, because we are so focused upon each stock becoming a multi-bagger, not focused at all as to how our overall asset allocation is working, how our equity portfolio is working, because the thrill that we are getting from those individual stocks is actually clouding that entire study of where we are going in totality. So I think my sort of thinking changed when I stopped thinking about individual stocks. Now they are like, as I said many times, they're like buses, named A, B, and C. I don't really care what they are. I mean, they are like vehicles that I need to, get on and get off at the right time. And that's it. I mean, I have no emotion towards that.
Yeah, that's interesting. So in some, what is it, yogic or what is it? You've detached yourself from the emotion of it all.
You have to do it.
And you're dealing with it in a process.
Absolutely. It's a process. It is a process system driven industry. I mean, you have to, it's like that my portfolio is sitting there and I'm watching it from a distance.
Mhm.
Just like you do to a business. I mean, it's just like you set up a business, you will watch it and see how it is doing, and then you tweak it around and to see where you need to make the changes.
It gives
But
you better perspective. If you've got distance from that, you can actually see it.
Yes. So I think that helped me a lot in terms of not getting any emotion towards any stock, because once you are emotionally tied to a stock, selling is very difficult. It's absolutely difficult.
Yeah.
Because
all long-term investors know that. I think
there are 15, 20 variables coming to you. There is global factors, there are macro factors, there's interest rate factors, there's sectoral pressures, there is management, there is interest rate cycles. How do you manage all these variables? You can't.
Right. And as a long-term investor myself, right, whatever you're saying makes so much sense, because we all have held on to stocks we shouldn't have held on to.
Exactly.
And and at the same time, we could end up overestimating our ability to pick up a stock which actually has a 10-year runway, because you can't really factor in all the variables. I can imagine someone who's devoted full time to studying it every quarter, every number, and trying to project, because we know that works, right? I think it takes extra skill. It's more difficult than what people think it is. It's doable, but it's much more difficult.
It's very difficult. Very difficult. I mean, how does a person expect that you'll come to the market with your capital and you'll make more than all the experts around there who are able to make only 12% return or whatever it may be? I mean, that expectation is unreal.
Yeah. And yet that's what draws everyone to the market.
Everybody is coming with that perspective. So the point that really hits me harder is that, fine, do long-term investing, buy and hold, all that is fine. You are not able to sell, that is also fine, because some of your winners should be able to make up for that.
Mm-hmm.
But even after you've got multi-bags, how and where do you sell? I mean, is there a plan? So a plan is a must. I mean, even if you are doing, discretionary investing, you have to have a structure and a plan. And most good investors out there have a structure as to when they will exit. I mean, it's not like they will never exit. I mean, Warren Buffett may say that he never exits stocks, but he does from time to time.
Yeah. And last year I remember when the markets were really right up there, and I was speaking to some property brokers just to get a feel of what's happening. And they said the business is good. And it's good because people are booking profits in stocks and moving it to a hard asset. Now, the guys who were doing that, they have a process. They have a disciplined approach. They're capturing a volatile gain in a market which is probably near the top of its cycle and moving it to a relatively less volatile asset, which is near the bottom of its cycle.
And that can only happen once you have a system in place that, my equity, if it goes beyond 60% of my overall allocation, I'll bring it to 50. It can only happen if you have that hard sort of rule in your book and you follow it. If the greed gets better of you, that no, let it go to 60, 70, 80, 90, then of course you'll have the same fate as anybody else.
That's right.
But I mean, that's I think how most successful investors have managed to be rational and taking out money or bringing in money at the right time. I mean, why do markets fall? Because there is no money left to be invested. So at that point of time, if you are able to come in, you should be able to get a decent outcome from the market.
That's right. So 2018 is when money control talks with you. And then I think the rest of it is a story which is well known, right? You hit the 6 finally.
Again, I would say it was just coincidence or good luck that I just sent a cold mail to small case. Vasant is leading the small case venture, Vasant Kamath, and I just happened to send him a mail that you're doing your own research and you have your own products. Why don't you have other advisors also on your platform? And they took out a new platform, and I took up a SEBI license, and I became their first advisor. I mean, it was just as if it was just Fate, I would say, it was just about that. I mean, I had no intention of restarting business as a business as such, but it just happened like that.
Wonderful, very nice. So I think that story is well known, like I said, and but I don't want to spend too much time on weekend investing, the business and all that. Super successful, Let's come back to asset allocation, and let's talk gold first. You have strong views on gold from our conversations. How do you think about gold, and how do you think that people should think about gold, and from a future perspective? What role does it play in the asset allocation mix?
The world is very divided on this topic. I think the history of gold needs no, sort of repeating here. My only one question that I am not able to answer for the critics is that why are central banks holding on to gold? Why does US have 8,000 tons of gold? Why does Europe have, another 10,000 tons of gold? Why does China have? Why does Russia? Everybody's accumulating gold. India has good 600, 700, 800 tons of gold. Why do central banks have gold? I mean, that cannot be a reason that, okay, we had a gold standard at one point of time and we had some leftovers from that point, and hence, we've not bothered to sell off this inventory that we had. It can't be that reason, right? So gold has an inherent play in the monetary system that is very well established. There is no question about it. Now, the experiment that we started in the 70s, where President Nixon said that, okay, we will not back the US dollar to gold and US dollar will be printed out of thin air. That experiment has continued till date. We've had 52 years of that experiment. The way things are today and the kind of, the debt structures that have built over the entire world, interest rate cycles have got disrupted. We are now not able to normalize with higher interest rates beyond a certain point. So right now, maybe interest rates in the US at 1.75 or whatever. I have personal doubts that if it can go anywhere beyond 3. The system just cannot sustain it. The kind of mortgage rate is already 6%. The government interest burden, social security burden, so on and so forth. So we've sort of totally molested the entire system by dramatic printing. Now, what happens, once we are not able to normalize? So it's like, more and the government is continuously giving stimulus. While we are saying that the stimulus is stopping, it is coming through various other means. Like, for instance, inflation-linked bonds are available in the US, $10,000 per head. That will give you 9% on a USD deposit. So there is stimulus that is continuously happening, and it is unsustainable now. As many researchers have opined. So there needs to be a shift from the the dollar denominated reserve currency system. And maybe it will be a multi-currency, maybe it will be commodity backed, gold backed, who knows what it will be. But with the cryptos now sort of again getting smashed and not really fulfilling the purpose of maintaining buying power in an inflationary environment, I think the focus will now again come back towards gold. And the fact that the governments of 85 or 90 countries are in the process of issuing or at least studying and implementing CBDCs, the central bank digital currencies, I think that will be the game changer, where the government gets complete and totalitarian control over currency. That, I think, once that may happen, and already we are able to see that there are the polarization of Russia, China, and these blocks are getting the commodity-led blocks. They are gradually moving away from the dollar. Of course, it's a very long process. But ultimately, I think gold will come to some sort of a center stage in terms of the monetary policy making. And
I kind of agree with that. I've been reading about this whole geopolitical thing, and the fight between the US and Russia and China, it may be fought on the ground, but the real fight is who dominates the world in the future in terms of the flow of monies, flow of capital, if you will.
Exactly.
So I was reading this very interesting article, actually, sorry, that ultimately you could have three spheres of influence: the Western world, the Russia-backed world, and the China-backed world. And I think if that were to happen, and the monetary system, see, for the dollar monetary system uh, to lose trust, it doesn't have to collapse. It just has to shake a little bit more than what people are used to.
Correct.
And suddenly they will go. Now, where do they go? They can't go to a Russia model. They can't go to a China model. And that's when I think that's what you're alluding to, is then suddenly something becomes center stage, which is proven and which is agnostic to who's in power.
Exactly.
And I guess you come back to
so
gold.
my belief in gold is because it is the only asset which has no counterparty risk. So a bar that you hold in your hand has no counterparty risk. Every other asset has a counterparty risk. Even the real estate that you're sitting on, the state controls it.
That's right. Yes.
So from that perspective, there is no other asset of its kind. However, given that gold standard is not coming back, that is also pretty clear. But in some format, the valuation of gold will have to be it will have to be revalued at some point, so that the balance sheets of the central banks can be sort of repaired. Right now
that's an interesting point you're making.
I mean, that's the only way they can repair the balance sheet, because an asset which is sitting in their balance sheet, which has not been revalued since, many central banks are still holding it at $32 or something like that per ounce. Okay. So once they revalue that, they will get a huge boost on the asset side in their balance sheets. That will be able to bring down the the debt percentage.
Yeah.
So and a lot of governments, if you see, third world governments have been constantly accumulating gold. And very interestingly, if you see the gold price in local currency for many countries, even like Japanese folks who have held on to gold have doubled their money in the last 3 years.
Okay, that's because of currency depreciation vis-a-vis the dollar, I would assume.
Yeah. Some gain in the USD gold, and some loss in the USD JPY. Yeah. And same in Turkey, same happened in Russia when the spike down came. Yeah. Indian gold holders have done really well. I think we don't give enough credit to the average investor in the Indian ecosystem, whether he's a village person or whether he's a middle class person. Everybody in India is investing in gold.
Yeah.
And gold in a long-term average has given you 11.5% CAGR. And many people don't pay tax on it also. So 11.5% post-tax returns for many is fantastic, and you're compounding.
Yeah.
And there's hardly any risk. The maximum drop that Indian INR gold has ever seen is about 25%. That's the maximum drop it has seen ever.
And I think for people, so Indians are smart that I think it's built into our traditions now. You have to keep buying gold all the time.
I think Indians are smart to the extent that they are willing to give up some part of the gains, but not have for safety and not have too much volatility in their overall assets.
Goes back to that famous thing: return of capital is more important than return on capital.
Exactly.
Yeah.
Exactly.
Yeah. And I think India is inherently a weak country. We need capital for the next 10, 20, 30 years. And if you're importing capital, you will be a weak currency. The best hedge is anyways, have some gold.
Absolutely.
Portfolio.
Absolutely.
Okay. So that's gold. What do you think of property? The last time I spoke to you, you said, correct me if I'm wrong, but you said this is a great time to borrow and buy property because then you get money so cheap.
I actually did that last year. And I think we are back in that regime where real estate will do well. I think in the next
cycle is turned.
The cycle is turned.
And
we may have some mini cycles up and down, but I think the cycle is turned, and we've consolidated long enough for all weak hands to shake off.
Yeah.
And it's now the actual consumption led demand that is coming into the real estate. I mean, it's not really investment demand that is coming in.
Yeah.
It's
And supply is a big issue for the next few years now.
Supply is definitely constrained. I mean, I was listening to some expert in NCR region, and he said beyond a couple of thousand units, we have nothing till 2029. So once that got exhausted, I mean, there's going to be definitely a shift in the prices, and it's already been there.
Yeah.
So and within the NCR region, for instance, Delhi has not moved. Will you believe that Delhi has not moved? But Gurgaon has moved like 50-70% at some places. So because Delhi is not growing at all, and Gurgaon is the growth sort of suburb to Delhi. Noida is growing, Gurgaon is growing, Ghaziabad is growing, but Delhi is stagnant. So real estate at the right location is also important. I mean, real estate anywhere may not work.
Like they say in real estate, you know, the three most important
location. Absolutely.
There you have it, a brief on the real estate. But tell me something, Alok. Property real estate goes back to the point that you should have a strategy at some point in time to capture your gains. You can capture the gain and move to different stocks. You could move to different asset classes. You could move to gold, property, etc. What other thing, when you look at allocation, what other thing fits into this? You got property, you got gold, you got, of course, you got a stock portfolio which is trying to ride and generate the income and the wealth. What else do you mix in this?
Nothing actually. So I just try to keep things very simple. I just don't like complexity in life. I like very, very simple things. You know, no nonsense things. Things don't get you into any dispute with anybody. There should not be any.
Avoid all conflicts.
Avoid all conflicts. You know, just keep it very simple. And even asset allocation, ideal asset allocation is 1/3, 1/3, 1/3. That's all. I mean, just do that and rebalance at the end of each year. I mean, if equity goes up too much, rebalance out of it into other things, and if something else goes up, rebalance into the other asset classes. That's the idea.
So I shared this earlier in this same podcast series. You know, we spoke to Mark Faber several years ago. Okay. In fact, I'm going to be speaking to him next month again.
Great.
And he had said that in all his experience, the best allocation is 25, 25, 25, 25.
Okay.
25 stocks, 25 property, 25 bullion, bonds, and 25 cash.
Okay, 25 cash. Okay.
There you go. He says all the other stuff, it doesn't.
I think in Indian market, we are very fortunate to have instruments like the sovereign gold bonds.
Yes.
They actually are replicating both the bullion as well as the bond nature of the instrument. And you know, if in a long-term basis, if I'm able to get 11.5% on gold, and the government is willing to pay me 2.5% more on that.
Yeah.
I mean, what more could one ask for? I mean, that 2.5% is taxable, the 11.5% is tax-free. I mean, that's a fantastic outcome from an asset class which gives you a volatility of maybe to 20% on the downside, if at all.
Yeah. So if I remember, and you should share that with listeners, when I spoke to you about bond, you said that though the government issues the bond at the gold price, you can actually buy it at a discount in the secondary market.
Yes. So this is a great sort of lacuna, if I may say, or a market inefficiency, where the listed sovereign gold bonds are always trading at a discount in the market. So if the current gold price is, let's say, 5,100, you'll be able to get a bond at 4,900, for instance. So you'll get a 3, 4, 5% kind of a discount in the market. Of course, you want to be a long-term holder to sort of get the benefits of that. But if you're willing to hold on to maturity, then you should be able to capture that inefficiency. And there's no point of going to the primary issuance if the secondary issuance is available. And the secondary issuance now is so many of contracts that you can get something which is maturing in 23, 24, 25. So it depends upon the kind of window or the runway you want to see.
You can get that additional return for the discount that it's trading at.
Absolutely.
Okay, so I'm moving forward now. Let's talk of some interesting stuff. What was your first? You think in buckets. Actually, I shouldn't ask you which was your first trade, because you're thinking in terms of baskets of stocks. You're not thinking individually. So I'm going to unwind that question. Do you remember your first investment? if you, whenever you made it, and how did it turn out?
I think must have been sometime in 1996. I must have done some trades. I think I don't think it was an investment.
It was always meant to be a trader.
There was a Goar gum company, Vikas WSP. It used to go up and down like that.
Wow.
I think I traded that as my first trade.
So if you traded that, you are the trader, because that was one of the most speculative stocks.
Very speculative. It's very speculative. I don't know. I don't remember if I made money or lost money, but yeah, that was the first trade I did.
Yeah. Well, if you don't remember it, you probably made some money. If you lost a lot of money, it's very difficult to forget those things. Here's a question which I've asked before, and kind of thought-provoking. Why do you do this? What's the purpose behind your doing all that you do?
Good question. Frankly, after that episode of 2013, where I kind of gave up everything, I restarted this to sort of engage myself and sort of have a sort of some fulfillment in life. Otherwise it would have gotten really empty. So it was not the growth or the money or the business that caused me to come here, but I would say I am more like a go with the flow person. I don't really plan too much. I have no plans where I would like, the typical question where you want to see yourself in 5 years, 10 years. I have no idea. So I'll go with the flow. I want to enjoy, whatever I'm doing, and then just see where it takes me. So I don't really have an answer to why I'm doing this.
You're basically trying to find purpose and meaning in what you're doing all the time, and where that leads you is where that leads you.
So whatever you're doing, do it right.
Do it right.
Do it objectively. Do it morally. And then just leave it. I mean, just let it go wherever it goes. I mean, so far, if I see just this last 5-6 years, I could not have imagined 5 years back that weekend investing would have this kind of a following or a business base. I could not have imagined that. So 5 years later, whether we go X times from here or the business model changes and we do something else, I don't know. I really can't say.
Tell me about family. How many kids do you have?
One daughter.
One daughter. Are you grooming your daughter in any way about all this? You're thinking about allocation, investing, trading?
No. So consciously, no. But I think maybe because of the environment, because of the conversation, because my wife also works with me in weekend investing. So she handles all the taxation, compliance, regulation, etc. And I handle the front end, and we have a small team.
She does the more difficult part of the work. Okay, got it.
Yeah. So she's the sort of the anchor around which everything is rotating. And I think just the environment around that, my daughter would have picked up. And I remember when she came to 11th grade, she asked me whether she should go for a commerce stream or a science field. And she was a good student. So I didn't want really to, push her into any direction which she didn't want to. But I said that my experience has been that having come from a science background, having done engineering, everything, these are all building blocks. And ultimately, what I've seen is that most people end up doing a lot of finance, a lot of, business from that perspective. So I guess she got influenced and she went to a business school after that and to commerce and, so on and so forth. But I think there has been a sort of a subconscious or unconscious sort of talk about finance, portfolio,
the environment,
I guess.
Diffusion. Coming back.
Diffusion, but now she works for a crypto company. So she works for a cryptocurrency company in the US.
Oh, how did you take that?
So it was not my call, not my calling. I just want to, sort of let her flow in her flow, whichever way she would like to flow and discover life on her own.
I had a similar conversation with my elder daughter just a few months ago. she's entering the 9th, and they have to decide whether to take science or economics or whatever. And she came to me. I said, I'm not going to give an answer. You can ask me any question you want, but I'm not going to give an answer.
Right.
So she didn't have many questions, because I guess they're all friends and they're talking and understanding.
Yep.
But there must have been some diffusion, because she took economics and she took that line.
Yes, absolutely.
But
kids are very smart these days. Not just our school-going kids, but you know, the youngsters that I interact with on Twitter. I mean, the kind of knowledge some of these kids have, I didn't have till the age of 50.
That's
right.
I agree.
I mean, 25, 26-year-olds, they know everything.
Yeah.
And that's very heartening to see, actually.
Yeah. You have to give them a chance to fly. Just let them be.
Absolutely.
Yeah. Just encourage them. Okay, so cryptos. By the way, are you a crypto believer, non-believer, agnostic? Where do you stand?
I believe that the technology that they use can be put to very good use, but I absolutely don't believe that it has any role in terms of the monetary system.
Okay, so you are if I may, at the risk of oversimplification, you're a believer in the blockchain.
Yes,
but not in the concept of it being a currency or.
That's right.
That's right. I kind of agree with that. We are going to be sharing this on Twitter, so
that's fine. Twitter knows my preference.
Twitter knows your views.
Yeah.
So it's I don't know whether this helps make the case or not, but people these days, I find, if they believe in it, they're not willing to accept an opposing opinion, right? Do you feel it's become a little more extreme in certain things? Either if you're a believer, you're also a non-believer in the other person's view. It's, to my mind.
I think this is a product of the social media sort of interactions and the way how we interact with people there, because we are not physically present, and we are remotely trying to push our view. And unless we sort of stick with our view, we'll be seen as, wavering and so on and so forth. So it's kind of the environment that causes people to be that way.
Yeah.
And societies are becoming very polarized. I mean, whether it's a Western world, even in India for that matter, there's a lot of polarization happening because of this.
And for people who are avoiding conflict or strong discussions, it's getting increasingly tough.
Absolutely. Totally.
Okay. Talk about the people you admire in any sphere of life, sphere agnostic.
So I think without sort of identifying those people, I think the qualities that I admire are where whatever position that you may have reached in terms of success in business, success in life, as such, in terms of knowledge, that does not change your sort of, their core. You remain the same person. That your core belief system is not changing because of your recent change in
external factors.
Yeah. I think people who can stick on to that, I mean, I really like that aspect in many leaders. I think even corporate leaders are of similar makeup, where you see that they're humble, they're down to earth. They'll travel in a simple car, and they don't really care about all the the paraphernalia around them, so on and so forth. So I think that really impresses me the most.
Yeah, I wonder whether those things tantamount to being distractions, and which only adds to the success of these people. Like Warren Buffett lives in the same house, drives the same car. You're living in the same house for all these years. There's so many less things to worry about, right? And that gives you the space to actually become really good at the things you want to spend time on.
Yes, that's true. So, I mean, again, from time to time, from age to age, your preferences or your likings for doing things will change. You may want to travel in a certain decade. You may want a bigger house at some point when your kids are growing up, so on and so forth. So, I mean, your indulgences will change from as you age, but at the core, if you are able to sort of stay grounded, stay humble, respecting other people, whether they are at your level of competence or not. I mean, I see like a lot of people would give me respect just because for the institution that I come from. But that should not be the case, really. I mean, every person has done whatever they had to do in terms of their education, etc.
Yep.
But we have some stereotypes of or branding of that kind. I think that can be avoided.
Yeah. Like just to sort of make the same point, what you were saying is that you can really lead a very nice, happy life if you follow these basic, simple principles, right? Don't overcomplicate, respect everyone.
Absolutely.
Live, and I think that, and I still want to make the same point. I think this, in effect, adds to what you do, because I think a person who's bothered about so many other things can't really have the space to really excel on what he is doing, right?
That's right. I mean, your singular focus comes only when there's less distractions.
Yeah. You remember the famous Barack Obama interview, right? Of course, we all knew that, but he showed it in practice. So someone asked him, why do you only wear the black suits? He says, because then I have one less thing to think about.
Absolutely, absolutely. And many of them have done that. I think even Mark Zuckerberg wears the same clothes, and Steve Jobs used to wear the same clothes.
That's right.
So several of them have gone that way.
Just less decision making.
Less decision making. Yeah. So there's a very nice prayer in our Jain religion. I'll share a paragraph with you.
Sure, please.
That comes to mind. That is really the sort of driving sort of principles, or where you would want to be. So it goes like this: कि अहंकार का भाव ना रखूं, ना ही किसी पर क्रोध करूं, देख दूसरों की बढ़ती से कभी ना ईर्ष्या भाव धरूं, रहे भावना ऐसी मेरी सरल सत्य व्यवहार करूं, बने जहां तक इस जीवन में औरों का उपकार. So this is like one part of that entire prayer, which kind of summarizes the entire thing. That you must stay grounded and respect others, and just don't get
jealous. Don't get
jealous of others. Just stay simple and true to yourself, and things will just be right.
That's a very good thought. And I'll try and see if I can quote that. If I can pick up that somewhere and quote that.
I'll send it to you. No.
That'll be helpful. Okay. Reading. Other than Twitter, what are you reading, and what do you think people should be reading?
I'm a very poor reader. I hardly used to read books in my college or school days, but post the business, some books I have read, maybe some of the great Wall Street books, the usual ones, some books about trend following, or some trader books, but not really. So I think the reading that I get out of Twitter and the blogs / articles linked on Twitter, that is a lot of reading in itself. And the book format reading is probably not for me. So I don't do much of that. But the variety of issues that one is able to read on Twitter, I think that gives you a very good sort of ensemble of, whether it is geopolitics, whether it is, a monetary system, whether it is, reading about CBDCs, whether it is reading about investor behavior, so on and so forth. So I do very eclectic sort of spread out reading, not particularly any genre or any type of.
This is also a good example of that you can actually use social media to your advantage, right? You can get sucked into a direction which just is a waste of time, or you could make it a platform where you curate the people you're following, and when they share great stuff, you can learn from it.
Absolutely.
Yeah. Okay. Here's something which I kind of gauged from your Twitter handle. You are an India optimist. Did I get that right? You
Yes.
just seem to believe that there's so many things that are happening which are right, and which are laying the foundation for and all these years of for India's growth. So just in conclusion, I think we're already way over time, but in conclusion, talk to me about how you think of India, and what do you think the future looks like?
I think you're right that I am inherently optimistic on the country.
Mhm.
I feel extremely. I think I am not able to understand how people can be detached to their country. I just feel very naturally attached to it. I don't know how and why, but um, if I think about it, I think there's a lot of right in our country in terms of fairness. But of course, there is niggling issues of daily processes that irks most people. But the larger issues of people being mostly peaceful, mostly harmonious,
Mhm.
I think these are big things in terms of where you want to live your life. I mean, if you are living in an environment where things change from one decade to the other dramatically, which they are in several parts of the world, that's very difficult actually. And from that perspective, I think, and the way India has handled itself in the last, I would say, 14 years since we had that financial crisis, and of course this recent COVID crisis also. I think, of course, some blunders may have happened on the way also, but largely I think for the kind of population that we have, I think we've done quite well. The fact that we are able to support some 800 million people right now on food grains, the fact that we have managed so far to reasonably control inflation, whereas supposedly much more advanced economies are at double digit teen inflation levels already and unable to control at all, despite us being totally dependent upon energy requirement. So I think India is doing quite well, and Indians are also doing quite well. I happened to visit some villages in Haryana a few years back, and to my surprise, I found that things were not as bad as one would expect. There were roads, there was power, there was potable water. People were having their basic needs. There was transportation available. So things have changed, and maybe living in cities we don't realize, but things are changing very fast. And that dramatic push, when it comes from that large section of people, that I think can catapult us definitely into a new sphere. And that's probably the reason why we never really go into a recession. I mean, worst case scenario, we go to a 5% a year. Best case scenario,
That's
we
a
go to
recession for India, huh?
That's a recession for India. So, I mean, from that perspective, we are very resilient, very, very resilient. And resilience is built into our own self. Each individual is also very resilient. I mean, in terms of how many people yourself, who may have over leveraged and gone bankrupt? I don't know anybody.
That's right.
I mean, and if I think about it, about my counterparts in the US or somebody, I mean, every third person could.
It's common. It's par for the course. Yeah.
Par for the course. So from that perspective, we are very resilient people. We are tolerant to a extent that while there is debate about tolerance, I think we are extremely tolerant. And not just in terms of any particular religious matter, but in terms of life in general, we are tolerant. The road is broken, we are tolerant about it. And, so from that perspective, I find that life here is quite peaceful. And of course, there is always scope tremendous growth and tremendous improvement. But I would not want to live anywhere else, for sure.
Yeah, I kind of agree with what you're saying. But what the other side of this, Alok, is that it surprises me that most of the world, at least most of the world that we come across in terms of our discussions or what we see, uh, does not appreciate most of the change and the stuff that's happening in India, right? Uh, we may read FII saying India's future is great, but most of the geopolitics just completely, ignores India, looks down upon India, and
I think that has changed.
it's changing. I give you that. You can see it's changing, and you can see the difference that it has, but I don't think it's still fair. It's reached a fair level.
No, not at all.
What it should be reflective of what India has done. We avoid almost all the crisis. I don't remember, most
Absolutely.
countries, like in this in the pandemic phase, if you look at most of our peers, India's peers, they all had their currency shattered.
Absolutely.
They're all struggling with all kinds of problems. And, of course, in India, there was distress, but we've come out at the other side of the pandemic.
Largely unscathed. Yeah.
Unscathed, yeah.
Largely unscathed. Absolutely.
And I don't think people even, they just ignore that.
So I think it's easy to sort of, call out the shortfalls.
Yeah.
But at the same time, one should also look at the positives, and I think there are a lot of positives.
I agree.
And then the media, of course, 99% of the media is hell-bent upon the narrative of the negatives.
Yeah.
So there needs to be a sort of a balancing.
It's also because I think negativity sells better.
Absolutely.
I remember someone tried this, right? Was it in India or was it in the US? They came out with a newspaper with only news that was good. Have you seen that?
So I saw this in Singapore. I was visiting Singapore, and I just happened to pick up the local newspaper, and I couldn't find a negative news. I mean, every page that I flipped, it was all about.
But in Singapore, it's different. It could be like the government regulation over there.
Yeah, probably is. Probably is. But what it does is, although that is also not right to just have positive
that's right.
things, but it does give you a lot of sort of positivity inside. Instead of what you read, what you consume is basically what you'll think about.
That's right.
So from that point of view, I think a balance is definitely required.
Yeah. So I think on that note, on which you've given us a very nice summary of what you think about India, what's happening, I'll call this podcast to a close, and I thank you for your time. It's way over time. I asked you for an hour, and we are nearly at 1.5 hours. But talking to you has bin wonderful. Many lessons and a prayer, which has deep meaning, more than anything else, I guess. So thank you very much, Alok, for taking the time.
Rahul. Thank you so much. It was great chatting with you.
Super. Take care.
Bye.